Varun, hi, afternoon. Good to have you on the show and season's greetings to you and your entire team. Just wanted to understand how is it that you're gearing up for Summer 2081 and does it seem like it's going to be as lucrative as the one gone by?
I first of all wish ET Now and team and all viewers a very happy Dhanteras and a very happy Diwali going forward. I think, I've been extremely positive on the markets and there's no reason why we have to change our view. Okay, there has been a little bit of a hiccup which has come in between where people have been a little concerned around the current quarterly numbers. But, one has to understand that there has been excess delayed monsoon, which we have been seeing. There's been floods all over. We have seen a little bit of election also being there, which impacts things to some extent. There have been a lot of things in this quarter which one has to keep in mind. Have things changed fundamentally? Things don't change so quickly. I don't think so. It will suddenly change from a fact that everyone was consuming so much and suddenly everyone stops. If we heard Maruti's commentary just now, which came about 15-20 minutes back, management was very clear that the festive is looking very good from a four-wheeler perspective, while everyone was getting so concerned across autos, right? We have not seen any concern as such building up either on four-wheelers or on two-wheelers or on any of these. So I don't see anything changing. Wealth creation of the country has been very, very strong and that always paves the path going forward also. I don't see any change in view versus what we have been having. In fact, if anything, this correction provides a lot of opportunity. We as a house, we were very positive on the large cap and the small cap space for the last 6 to 8 months. And we continue to maintain that stance. We were not positive on mid caps because mid cap index had rallied a lot. But then after this correction, there is some value there as well. So I'm extremely positive as always. Yeah.
Positive as always, that's a take coming in. But just looking at some of the stocks which have been buzzing in the last few minutes, Hudco just reported its numbers. We are flashing the numbers for you at the bottom of the screen. It seems like the street is happy with the performance because the stock has suddenly shot up 6%. Let's pull up Deepak Fertilizers as well. That continues to gain ground. Another good set of numbers coming in, and that stock is now close to the life high level, 7% higher, though it's off the highest point of the trading session. On the losing side, however, you do have Maruti Suzuki, which is, very volatile right now. It saw that sharp dip, recovered, and is again moving a bit into the red. So, just trying to make up its mind as far as Maruti is concerned at the moment. Though from the broader market, Sirma SGS is up 13% and Macrotech Developers also continues to do quite well with that 7% gain. Nuresh, if I can bring you and ask you the chart check for Macrotech Developers as well as Hudco.
So, real estate as a pack has been going through a sideways consolidation. Same is the case with Macrotech. Has corrected a good 20-25% from the top, but 1050 remains a strong support. So, expecting some bit of a bounce back here. Hudco again has seen a very large correction. So, from 350 down to 200. It started off around this 180-200 mark into this huge move. So for now, expecting 180, 200 to hold, but would be tough for it to cross 240, 250 levels.
Okay, 240 to 50 levels. That's the visibility on Hudco after that massive fall that the stock has already had in this current correction in the market. Tata Motors, though, still languishing under pressure. Maruti, like we just flagged off, about 3.5% lower right now. Federal Bank is doing very smartly after its numbers. It's an 8.5% move. SBI is now scaling 5% in the green. And like, Kunal was just flagging off, both ICICI Bank and HDFC Bank continue to sit at life highs for themselves. Varun, what's the pecking order now when it comes to some of the large banking names?
So we are extremely positive on ICICI Bank. It has been absolute gold standard. I think this is a very consensus buy which anyone would mention to you. But just look at the performance. It's just flawless, right? I mean, they have been absolutely bang on every single time. They're coming and delivering every single quarter. They give you growth. They give you surprise positively every single time on asset quality, on any kind of number that you can look at across their parameters and consistently. So flawless delivery, one has to have it as a buy. And I still think that valuations are extremely reasonable for the kind of performance there is. So I don't see a reason why ICICI Bank shouldn't be a top pick. So that remains our top idea in the banking space. Followed by HDFC Bank. I'm positive on HDFC Bank also, considering that things are turning around now over there as well. So I think in probably a quarter or two, you would see things materially picking up for HDFC Bank as well. So among the top two, I would be very positive in this space. If it comes to mid-cap banks, I think Federal was again an exceptional number. They have delivered. The commentary was pretty strong. I think this stock can do still quite well from your valuations are extremely reasonable here as well. So yeah, I think these three will be the ones which I would be more positive on.
The pecking order, of course, it's ICICI Bank, which seems to be the consensus trade, but has run up 30% this year already. But talk about Federal Bank, hear out what the management had to tell us earlier in the day, because we did speak with them whether the growth and the numbers that we saw this quarter are sustainable or not. Hear out what they told us.
The growth outlook, credit growth outlook, we are reasonably confident of maintaining around the high teens, say around the 18% mark. And we see reasonably good credit quality growth. One of the main advantages or the strength of Federal Bank is the pristine asset quality and credit cost being maintained at the levels which are probably the best in class in the industry. The Q2 growth is where we saw a sort of dip. That was primarily because we took a call to reduce certain high value deposits and the wholesale deposits. And because it comes at a price, as you know, we can get deposits at a cost. We also want to make sure that we maintain the cost of deposits within manageable levels. Having said that, if you see the growth in Q2, you split between CASA and deposits. CASA has grown very well, probably one amongst the best in the industry.
Right, okay, that's the take coming in from the management. In the meantime, just taking stock of some of the other names, BEL is shot up quite smartly today, about a 5% uptick coming in there. Varun, what's the call on the beaten down defense PSU names?
The theme is absolutely something which is going to remain as a great theme over the next few years, right? You're seeing so many geopolitical concerns. Government has been clearly focusing on building this side, and there has been a lot that we have been seeing. So what had happened was there was a sharp run-up we had seen in them ahead of time. They all went through a period of consolidation. There had been some correction which happened because of extreme positioning in these names, which came off. They have settled for now. I think there were a lot of concerns getting built around the government formation, etc. Again, those concerns have eased after the recent elections. So things are looking pretty optimistic. I think PSUs overall as a pack, not only defense, but I think overall as a pack should start re-rating. Valuations are extremely comfortable and things are absolutely the same as it was, as I mentioned a year before. There is continuity in the government. There is clear visibility on their delivery. They are doing the right things. So I think there's no reason why one should not be positive on the PSU names.
Coming in on defense as well as Bharat Electronics at the moment. Just taking stock of what else is buzzing around in the trading session, because you do have First Source, which is losing out today. IT actually has been on the back foot. Hudko, as I was pointing out, just continues to gain further ground. APL Apollo is the other one that we are watching out for, and on the losing side, it is Balrampur Chini, which is down, KSB, which is under pressure. So some of these stocks are under pressure, but it is the day of Dhanteras. So let's get a mood check going, and let's take it across to Asta, who's right there in the streets of Mumbai, to get a sense as to how the festivities are panning out and how people are flocking to the jewelry stores. Asta.
We are at PNG Sons Jewelers, and as you can see, the store is filled with people. Number of footfall has increased as compared to last year. Despite the high prices of metals like gold and silver, people are still coming to fulfill their festive vibes and buying gold in the form of coins and jewelry as well. According to the salesperson, also there has been 20 to 25% increase in the sales of gold and silver, despite heavy prices, high prices, but still people are coming in and buying buying gold and silver in the form of gold coins and ornaments as well. Now, according to salesperson, they have also said the footfalls has been doubled since the last year, and the main basic trend of this festive season is that most of the jewelers in Mumbai have come up with a new trend that is called festival with exchange. So now people can come in with their old jewelry and they can buy the new jewelry in exchange for their old jewelry. Now this trend and scheme is very useful to people as they can come in, purchase more gold, purchase more quantity of gold in place of their old jewelry. Also, this scheme has helped the jewelers also for their boost of demands and sales. Despite of the geopolitical tensions, which has been the key factor for increment in the for the increment in prices of gold, but still people are loving the festive vibe and they are coming, and the footfalls which the sales force is increasing has been doubled as compared to last year. Also, the sales and demands will be continue to grow according to the salesperson, and it will exceed 40% as we can hear from the salesperson. So the demand and sales have been boosted as compared to last year, which is a very good factor of how the festive season is in the hearts of people, especially in Dhanteras to Diwali, which is a very important festival for all the people across India.
That's that on gold. But Kunal, what is your sense? You think in the very near term it's gold which is going to overtake equities, or actually silver, I should say?
Yeah, I think silver is looking much more stronger on the recent charts, but I believe that the trend would be intact for gold and silver both. So from here on, again, difficult to pinpoint a price level, but I would believe in terms of dollar prices, I would look out for 2850 to 2900, 2950 range for gold prices, say over the next 6 months to 12 months. Silver, on the other hand, I think has gone through a very big breakout, breaking past about that $31 and $33 breakout range for itself. So I think that's another asset class to look out for. Whether it will outclass and outshine, I think let the equity bulls make a strong comeback. I think once that happens, I think we could probably make a strong dash, beating out the outperformance from gold and silver.
Okay, so that's the take coming in as far as gold is concerned. But Cipla press conference, as we had highlighted earlier, is underway. They're talking about looking forward to a strong Q3. From Q4, they're expecting strong numbers from the US market as well. The second half of the year is going to be better for the India business. No change in guidance as such for Cipla, and that's the reason the stock is actually seeing a bit of a up move. We should have tried to cut into the con call and hear out the management when they're talking about a stronger Q3, expecting US sales to pick up from Q4, but that's the take coming in on Cipla. For now, the stock is holding up in the green, or rather actually it's still in the red, but from the lows of the trading session, it's up marginally, and chronic therapies is something that they're saying is growing very strong at the moment. Varun, if you look, okay, so Cipla management is speaking, we can perhaps cut across to that press conference.
Increased vigilance on operations, and we've got several use cases in the supply chain where we're also looking at how planning and how accurate planning can be and forecasting can be. So yeah, multiple adoption of use cases in AI as well, and in AI. And digital is a different thing. I think our whole Breathe Free initiatives are on digital. Our whole initiatives on reaching customer are more digital than they are now. Than they are the regular manner of taking people to reach these, right? So even our ability to showcase how to use a proper inhaler is now a digital solution. And I think we're constantly expanding the boundaries of what we can do.
Thank you so much.
Thanks, Anju. The next question is from Varun Saboo, ET Now.
Okay, so that's actually Varun from our team asking the question. We can hold on and hear out what he has to ask. Management's answer to that, at least, what they have to say, because for now they are maintaining the guidance for the full year. So no change there, expecting Q3 pickup, and from Q4 onwards is when the US sales is likely to get better, and that's what the street will watch out for. Varun, have you been watching out the pharma space closely? Because of late the earnings have turned and it's been a couple of quarters for that. Okay, we can cut across to that con call.
Have given is 24.5 to 25.5%, and both this quarter Q1 and Q2 your EBITDA margins are on the higher range. So would you like to, change your guidance to more upper range, or should we think that the coming 2 quarters, the EBITDA margins would be lower?
I actually lost a significant share of your question. I don't know if it was just me or it was everyone else. I just heard the last line on EBITDA.
Okay, just wanted to understand, sir. Going forward, what would be your EBITDA margins? Because you're given a guidance of 24.5 to 25.5%, and you're already on the higher range. So would you like to revise your guidance? Or should we think that the Q3 and Q4 would be, a little less in terms of guidance?
Yeah, Q4 definitely is a quarter where the guidance and the trajectory on EBITDA is lower than the other quarters, for sure. But I think we're not revising our guidance at this point in time.
Also, sir, what about the R&D spends? It was 5 to 6% of sales. So even that is going to be on the same range?
Yes, broadly. I think with revenue expanding significantly at and the state we are in right now, probably around the 6% max could be the R&D range.
Okay. So one last question on the GLP-1 opportunities. Any new development on the same?
No, and I think this was the question that perhaps even Anju was asking, which I couldn't address. Yes, so on the GLP side, I think it's safe to assume that Cipla will be in the first wave of launches in India when the market forms, as well as many other parts of the world. So we forgot, the most recent, the product that's going to be the most recent entry from a generic perspective that's in our pipeline, as well as we're looking at several other products within the GLP-1 space that require generic alternatives.
Okay. Thank you. Thank you, sir.
Thank you.
Thank you so much.
Okay, so that's the latest coming in from the management of Cipla, saying that they're holding on to the guidance. The R&D spend is likely to be at the higher end of the range because the revenue pickup has been quite strong.
If you like this video, then like, share and subscribe to ET Now.